Hey traders, Nick Shaheen revisiting MVIS, Microvision. I won't discuss much of its fundamentals because I'm pretty sure you're smarter than me at this. At least most of the comments that I usually get from videos, everybody tells me how much they know more than I do. So I will stick to my chart comments. And so far I've been spot on. I think this is the third video. I went and reviewed the last video I did, which was on the 28th right here, and I had just done that was an update about on a video from up here where I said patience or something like that. But anyway, so whatever I said there happened, and then here I said I won't say what I said. I'll show you. This was a snapshot of the video I just took. I said we could be in the process of doing a handle to the cup and handle, and this would be the upside, just over 24, right? This is what happened just days after that video, 24.75. I can't make this stuff up, okay? So if it's on video, you can go back and review it. So what I did is just stuck to the fact that I'm just trading charts, and I don't care as much about the fundamentals. They do care for somebody who's investing, but the price action usually unfolds based on what machines think, and that's more charts than actual fundamentals. If you want to go to the fundamentals, if I remember correctly, this one is traditionally super expensive. I say traditionally because of the metrics. 1,000 times price to sales. So whatever sales it has, the stock price right now gives it 1,000 years worth of credit. Usually that's as high as I've ever seen it. I thought Zoom was pretty high last year at 120. They grew into it. This is 10 times more expensive from that perspective. But this is the early stages of something, so I won't talk about fundamentals. That's on you. It looks like it's more about what can happen in the future than what it is right now. It's almost like it's pre-revenue. Okay, so it's stupid to talk about fundamentals. It's not stupid to have a thesis and believe in it long term. So there are two sides to every coin. Meanwhile, there's the price action right in front of us. Do I have lines? I do have lines. Sweet. Okay. So this was a catalyst zone on the 28th. They had ups and downs that day, and then they burst higher. They got to a prior fail point, and they faded, normal. They fell into a prior buy point, and they bounced, normal. And they're now negotiating the same level from whenever I did this video last, which was in the late of May, on 528 exactly. And look, if I go right, that's the same level it is right now. So I'm going to reiterate my statement. It fell into support. It has support below it from the price actions perspective. It has a trigger above. So I think above 1650, it would rekindle some buyers to get it up to the 18 zone. In fact, I will draw it right now, say that this one right here could be, it is resistance until it's taken out, and then it becomes a breakout opportunity. I'll put it in smaller. So that's as said as that. And if that fails, then the opportunity to buy it would be here, and this would be with a very tight stop. Because if they lose this, then it becomes a trigger lower and it drops below 10. I think there are some people that hated it in the comment section a couple of videos ago, and they said, oh, it's going below 10. Maybe it is, maybe it isn't. I won't judge it until it loses this line. What is this line? It's 12-ish. And just below 12, there's another support zone into 10.5. If you look at it, this area was a very big top back in 2020, December, and then it served as a breakout, retested it in a big, massive way. Look at all this volume that happened right here. So that is a stomp the foot type of a deal, and they never came back to it. So if they do come back, I have here an alert to say, hey, go check it out. Something is going on. Of course, buy the dip down here. Duh, Nick. So perspective matters. Lines on the chart matter. This zone matters. This is one candle that I thought was interesting, and I drew a box around it. And if I do this, it's playing a role, right? So I'll leave it where it is. And this was a candle that mattered 2 videos ago in April. And if I do this, it still matters now. So I'll leave it back there. So be agnostic with emotions and just follow the price action. The good thing about establishing a base so strong is that the bulls can rely on it, but the bad thing is if you lose it, it becomes a catalyst lower. The machines will flip their opinion and then they will start selling the pops versus buying the dips. Something to look out for. So for now, the plan of action is ping pong inside this range. This orange line, it's the point of interest. So for this period of time, this is the busiest spot where there are buyers and sellers the most, right here. So it's going to be sticky. The price is above it now, just barely. So it is some sort of a repellent. So it's support. If they dip, I think they will get the benefit of the doubt. So the bulls are wanting this to happen. Okay, and then when they come back here, they renegotiate that, and then if they take it out, then they'll do that thing. Cup and handle-ish. It's a neckline. The bears want to take it down, but I don't think they can break. So what is there to do? Trade the range inside this rectangle, this ping pong inside of here. Know that there's support here, and if they lose it, they swing down to here and they come back, and then there becomes resistance on the way up. Ping pong inside of this if you're a fast trader, or if you want to really chase it, chase the breakout from here or the breakdown from there. That is the trade setup. Depends on speed. Can I use options to get long in different ways? Of course, I can sell puts for income or to buy shares below current price, way below current price. Earnings just went, so there's probably a little drop in the implied volatility. They haven't checked. This would be something I send out to members only. Meanwhile, it's instead of buying shares right here at face value and having no buffer, I prefer to sell puts lower, collect money for the hope of buying shares lower and get paid to do it. Therefore, it would give me a buffer of X%, sometimes 20%. And I don't start losing money until like 22% below that. I'm rounding. I haven't checked, so I don't know what the premiums are like. Or even if it has options. I'm pretty sure it does. But anyway, there are ways to trade other than the traditional buy and hold shares. Buy and hold calls, I usually need a trigger, like breaking through this. Then I'd buy and hold calls. But otherwise, I'd rather sell stuff. Let me see, shorter term. So there isn't much, 17 is a nice round number to pick at, but this is definitely a sharp line. The high of 1638 that day, whenever that was, 2-3 days ago, a couple of days ago, mirrored here. So clearly it's important. The point of control for this period of time, shorter period of time, is above us, so that's kind of a problem. It's inside this box, middle of this box. Remember that one candle that I said was important? Right in the middle of the box is the point of control. So old lines matter. And here you can see how the bears are in control shorter period of time. The bulls are trying to put a floor like here and here so they can start rebuilding an ascending trend. And the first step is to stop making lower lows. So you can't come back and make a lower low. That's going to open another trap door. You can come back and make a higher low. Lower high is fine, or just the same high is fine, as long as you keep the trend alive, so you can start building a trend this way. That's it. Next, nothing here is a recommendation to trade it this way or another. I'm just sharing the price action that is available for me if I wanted to actively trade this name. Signing out. Now, don't forget, subscribe to this channel if you don't already, and click on the alert so you can get notified whenever I release new videos. So far, the channel is still free. Thinking of locking it up.